Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, coming to you live from Consensus in Austin, Texas. Joining us for this segment, Allegrante, Chief Legal and Compliance Officer at Fireblocks. We're here to discuss why we're in the 1934 moment of digital asset regulation right now. It's great to see you as always, Jason. Welcome back to the show.
Great to see you, Jill. Thanks for having me.
And a great time to talk about regulation, right? In the digital asset space, we've had, a number of momentous events over the past couple of weeks.
It's an incredible time. The sequence of events, whether it's Bitcoin ETF approval to ETH ETF approval, which I don't think a lot of folks expected, to the FIT21 bill coming to a vote on the U.S. House of Representatives floor. I think we are in the midst of a historic shift in the way we look at crypto. I have compared it previously, this moment of time, to 1934. I don't say that because I think crypto assets are securities. I say it because historically, going back 100 years, we've seen cycles of crisis giving birth to new regulation and really new and flourishing industries. And we saw that with the securities crisis in the early 30s, with the passage of the Exchange Act in 1934. And I would argue that today we have the most robust capital markets in the world. And that is a direct result of kind of putting regulation around all that activity.
Yeah, and I think it'll be positive for the industry as well if we're able to enact many of these things, because you don't want to stifle innovation, but you want the framework around it. You don't want the brain drain, the talent drain also leaving the U.S. as well, right? Because capital markets is so robust. You also want to be here, as you develop the architecture around digital assets as well.
The insight of our legislators, right, going back to 1934. Is that markets and market participants actually want clear rules, they want clear rules of engagement, and this is what unlocks the value, right? You want to know that when you do X, Y, or Z, this is the likely outcome under a legal system. What we've had in the crypto industry for far too long is uncertainty, regulation by enforcement, right?
Spoken about that.
And all sorts of things that are really designed to keep crypto outside of the regulatory perimeter, right? And we're really seeing that change, right? When we talk about the normalization of these asset classes, I mean, I think about Bitcoin ETFs, I think about ETH ETFs, right? And I think about these assets landing in the portfolios, right, of universities, your mom and pop retail investor, teacher retirement accounts. I mean, so what we're going to see, I think, very, very soon is that a large part of the American public is going to wake up and realize that they're actually invested in crypto assets, and I think that's going to create a huge change in attitudes.
Yeah, well, it's interesting. We've had a couple folks on the show argue that once this framework is developed, it doesn't necessarily have to be under the securities bucket or the commodities bucket, that perhaps it is, it's an asset class of its own. It should be regulated in a different way, similar to how the EU is developing its framework.
Absolutely.
Would you agree with that? That it's not just a one size or plug and play type of solution?
Not only do I agree with it, I think there's really broad-based consensus around it. I think, I think the view of many industry participants, right, would be very risk-focused. You look at what the risk is and you act accordingly. I think it's quite clear if you look at the characteristics of a lot of these assets, they don't fall into what we would consider a security, right? And therefore, security-style regulation with a disclosure regime, right, coming from a centralized place doesn't make a lot of sense. So some of these assets probably look more like commodities. Maybe some of them do look like securities, and I think we have to figure out what that balance is. But I think at the end of the day, right, what FIT21 does is it provides a lot of clarity, or at least is an attempt to provide clarity around how we answer and approach those questions.
I would also argue too that everyone was looking forward to the spot Bitcoin ETF approval. That was expected to be the catalyst. I would argue that the framework that what the House had passed last week with FIT21, that really is the catalyst to drive not only institutional adoption but also more product available for retail and make it more understandable.
Yeah, again, part of the sea change we're seeing, right? So I've never believed digital assets should be a political issue. It's a technology issue, right? And we should, what technology means has to do with what we do with it, right? And so blockchain technology, I think should be basically neutral. However, what we are seeing is a real sea change in Congress. We're seeing a lot of support on the Republican side. I think FIT21 had something like 70 or 71 Democrats supporting it. So, arguably, to the extent it is a political issue, we're seeing, Democrats breaking with what had been, I think, the orthodoxy of the party for some time. And, interestingly, and for better or worse, right, I think we all wish the industry didn't have to do this work at all, but I think we're seeing crypto emerge as a real political force in this coming election cycle. And I fully expect that we will use that we'll use it to get sensible regulation, because that's really what we want.
I mean, of all things, this is where you get bipartisan support, right?
Correct.
Ironic in a way. So I think that certainly is encouraging. And to your point before, it's not, everything's not a security. I mean, you think about the ETF, it's almost like an investment in technology, not necessarily an investment in a store of value, if you will.
Yeah.
So if you think about it, it could be part of your tech portfolio allocations in a way. I mean, you're investing really in the technology behind it.
What you're doing when you really purchase ETH, right, is you're investing in the ETH blockchain, and you're investing in the ETH ecosystem. Because really what these tokens in particular are designed to do is to provide an incentive structure around the consensus mechanism for updating the blockchain, right? So I think you're absolutely right. If you want to think, one way to think about investing in ETH is thinking in an underlying infrastructure platform and everything that's going to be built on top of it. It's your chance to literally get in on the ground floor.
All right, appreciate the insight as always, Jason. Thanks for joining us on TradeTalks, and thanks for joining us for Consensus. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.